Hey guys, how are you? I want to try and make this video quick and not too draggy. I'll go through my trades on the day and then I'll just briefly go through all of the mistakes I think I made and what I could improve on in my trading. So first thing, let's look at ROKU, rocket ship first thing in the morning, and I was looking to short into any kind of failure. So I shorted right here, first short of the day on the break of the 4 EMA, break of this candle right here. So any failure, first failure after a parabolic move in one direction, I'm shorting it, okay? Now what happened? I covered for a loss right there on the break of the high of the day. I saw that it had a lot of momentum. These buyers were coming in strong at this point. Now I was not trading with any time in sales at this point, just straight blind paper trading with trading view only, all right? So I covered and I reversed the position right there. So I went long and then I was selling into strength at that point. Hold on a second. Why am I blurry? Anyways, who cares? Let's keep going. Selling into strength. I sold too early. That was one mistake because I wanted to, I guess, get out. And maybe a part of me, a part of my emotional psyche still wanted to be shorting this market. So that is something negative, okay? So I was still looking for short opportunities. I didn't trust this to go long. I didn't trust ROKU, okay? But it kept going higher, so I was out right there. I made some money back and I was out. Done. Now, okay, ignore the horizontal line I put there. That was there from afterwards. Now, again, right here, first red candle after a parabolic move up, I'm shorting it. I'm looking for a failure, as you can see. So I'm one red, one green so far. And I covered too early. I should have been holding as it was going higher, as long as it holds the 4 EMA. Got it? So I shorted it right there, and this time I was covering quicker. So the first time I didn't cover, as you see, I didn't really get a chance to cover. This time I was covered, it was failing, I covered more, and there I shorted by accident, and then I covered the rest right there. So that was a successful short. I shorted and I played the fade, nice fade right there. All right, let's keep going. Next trade. Big move up higher, break the high of the day. Now, okay, so watch this. So I'm going to mark in the high of the day at this point, which is 131.88. Got it? We came up, broke the high of the day. Then we started to fail. Now, when you start to see this, it could signal a failed breakout. When you see a failed breakout, it's very important that you trade in the direction of the failure because there are surely trapped traders on the other side of that failure, okay? So here we go. I shorted there with the stop loss above the high of the day. It broke the high of the day and I covered. Now, was that a good cover? I don't think so, personally, because my stop loss had to be a little bit wider at this point. I shorted just under 132, but I had to keep my stop above 133, I think, personally, just because I have experience shorting this market from a paper trading standpoint, and I noticed that when the stock starts to fail, you'll get a breakout and it'll break out, right? Shorts will start covering, but then it'll fail. And it happens so many times. We get the failure, but first it will stop out some shorts before failing. So as you can see right here, we got the breakout and then it failed. Bah. So it stopped me out and I was not happy there. I mean, I stopped out because I didn't define my stop loss well enough and I risked too much on that initial entry right here, okay? So yeah, and then I reshorted right here again on that little kind of lower high thing. And then I was covering as it was fading. So that was a successful short. But the thing is, I was almost revenge trading. And the mistake with this is that I was not consistent with my size on all of these trades, all right? So I started, my first short was a smaller size. Then I went long with a bigger size. I didn't hold the long. Then when I shorted here, it was approximately the same size as the beginning, maybe just a little bigger. So that one was fine. And then up here, when what did I short here? No, it was the same size as this one. But the thing is, my stop wasn't clearly defined. So when I shorted above 131.88, my stop was clearly right above 132. Now when I shorted it here, my stop had to be above or close to 133 or just before 133. So guys, I can't stress enough how crucial it is to have very intelligent stop loss placement in the market, okay? You cannot place your stop in obvious locations because you will get stopped out. If you place your stop right at the even number, you're gonna get stopped out in most cases, okay? So you have to be very, very, very particular with where you place your stop losses. So guys, if there's any one skill, technical analysis, trading skill, apart from managing your emotions, cutting your losses and all that stuff, it has to be stop loss placement. Okay. Now, when we trade live markets, most of the time we do not use live stop losses. Obviously, it depends. In some cases, yes, but most of the time it's just your stop is there. It's a mental stop. You put an alert and it hits it and you're out. That's it. So you have to become very good at following that, and that's another tricky part about trading. Okay. So yeah, I'm going on a tangent here. So yeah, that's Roku for you. Okay, let's keep going here beyond. So I'll just kind of run through these trades real quick. Let's see here. Okay, so I originally tried to go long beyond right here. So that's pre-market. Now watch. Move lower, move higher, tried to break the high of the day, and I tried to go long right there on the break of the high of the day. It failed, and I stopped out the trade too late. Again, I did not have a good enough stop placement in the sense that if BYND breaks the high of the day at this point and fails, most likely I should probably be stopping out at 118. So again, my stop loss was not clearly enough defined, and I ended up stopping out here down in the low 117s. So again, not good with the stop placement. Very important. Okay, let's keep an eye out again. I did go long after we got the real breakout. So you can see we chopped around for a while and then we got the real breakout afterwards. That was a successful trade as we went long, and I held as long as it was holding the 4 EMA, holding and then selling into strength, and then got rid of the rest of it there. Okay, now after this I was just trading. There was some weird trades here. I think I shorted it here and then I covered, and then I shorted it again on that failure, shorted it again, and then shorted it again, and then shorted it again, and then covered everything. So I don't know, there's some weird trades here, I'll be honest with you. So I'm gonna look to end the video pretty soon here, and I'm just gonna go through what I think I could have improved on all these trades and what I think was okay. So just real quick, let's just do the last two trades, which one was on Amazon. Amazon rocket ship first thing, and then look at this. So up, choppy, up, couldn't break the high of the day, chopped around, and kind of consolidating in a bullish formation, as you can see here. And then when we broke the high of the day, I went long. That was a good entry, in fact, because I did manage my risk on the trade. I took a smaller size, and my stop loss was, in fact, I would have had room. I think I would have even had room below this pivot right here, 2106. Went long right there, and as you can see, it goes long, fails or fakes out, and then gets the move. So you have to be so prepared for this, guys. If you're buying breakouts, you can't be just buying the breakout and expect it to go direction right away. Go your direction right away. Because you'll get fake outs. A lot of the time these things fake out. So you got to be ready for that. I took some profit there, and I added more right there to the trade. Okay, now look at this formation. It is sort of a rising wedge formation. So if you wanted to really go in with it, it would look something like this. Kind of like that, rising wedge formation. And that in general signals weakness. Not all the time, but it just means that we're making higher highs with not a lot of follow through. So that's not exactly the kind of trade you want to be adding to. You kind of want to be taking your profits relatively quickly and letting it run for as long as it has juice. And that was my mistake with this trade. I traded it like it's a momentum stock. Amazon was not acting like a momentum mover at this moment. So adding right there was not a good decision. And as you can see, it just chopped around after that, got rejected, and then I had to endure some pain. I was red for a little bit, and I finally decided to cut it there for a decent loss actually right there. Once it broke below that low for a third time, I was out. I cut it, okay? Last trade of the day, Facebook. Facebook was choppy first thing in the morning here. I went long there, assuming that this low of day was going to hold. And once I saw this sort of price action, we came up to test this, got rejected. I sold right there for a very tiny loss, just under break even. Right, so that's pretty much it. And after that, well, we got a nice breakout afterwards, and it got follow through. So that's it, guys. So let's go through what I think I could have improved on these trades. So first of all, my positives were that I had very nimble executions. My executions were nimble in the sense that I was ready to cover fast in most of these trades. And I think this is important. Okay, you need to trade almost as if you're a high frequency trading system. Although you'll never be as fast as them, you have to think like that. My negatives, I cheated on a lot of these trades, the later trades, by adding size. I was not strict enough with my risk management framework, and I in fact didn't follow it in the last part of the trading. Some trades I followed it quite well, but I did in fact go against it. Okay, so there were some trades where I forgot, in fact, or just didn't think to manage the risk exactly the same as all of them based on my risk management framework. Exiting too early in ROKU, not that stop loss on BYND. Again, stop placement, that's another thing. Amazon trading it like a momentum stock. So if I would have to make, so I would say, first of all, let's say stop placement, very important. Risk framework, so important. Literally, like, you need to stick to that completely. So I could put 1,000,000 stars on that risk framework. You need to absolutely follow your risk management framework. Like when you're trading a live account, it's not permitted to trade this way. Simply, you cannot go long 1,000 shares and then whenever you want decide to go long 10,000 shares. You cannot do that. It's like a get out of jail free card. It just doesn't work like that. You cannot do that. With a paper trading account, you can do it. You can use the get out of jail free card, and just at any moment you say, okay, screw this, I'm going to short 10,000 shares, let's go, boom, and then all of a sudden you make back your losses, but it doesn't work like that in a real account. So why do that? All right, guys, that's why I do these trade reviews. I hope you enjoyed this video, and I hope you enjoy my hat. I got it in a very far away place. All right, have a good one. Bye.